Africa says do something new. Well, away from that, let's head into Karibu, East Africa, looking at the top stories making headlines from the world of business across the East African region. And we start with the people of Rwanda. Now, there is a reprieve for Rwanda as China cancels the $7.1 million debt. China has offered Rwanda a 7.1 million debt relief or 50 million Rwandese franc. Now, all 50 million rather RMB one on a loan used to build the 6.36 kilometer Masaka Kawunga Road under the Kigali Urban Road upgrading project. According to a statement issued by Rwanda, the move is part of the Chinese government's decision to cancel the outstanding interest-free loan in accordance with the agreement on the economic and technical cooperation between the two countries, that is China and Rwanda. Now, the two countries enjoy a healthy bilateral cooperation. This is evidenced by the substantial contribution of the People's Republic of China towards Rwanda's development aspirations. Now, also the agreement was which was signed between the two cements further their relationship, which clearly looks at the bilateral relations and how best the two countries can work together, not only manufacturing but also working together industrialization and far beyond that particular one. Now, according to Rwanda's Minister for Finance and Economic Planning, Uziel Ndagijimana, did reveal that after signing the debt cancellation agreement that this particular agreement is to cement their relationship between Rwanda and, of course, China. Now, also China was represented by its ambassador to Rwanda, Wang Zhuhun, and China says that the debt cancellation is part of the economic package announced by President Xi Jinping at the 8th Ministerial Conference of the Forum on China Africa Cooperation. So when you look at that, China continues to be one of the key members or the key superpower partners to the African continent. When you look at how the number of projects in the African countries, sub-Saharan Africa, look at the Saharan Africa, look at Southern Africa, most of the projects that China's government has been able to work upon, most especially infrastructure, setting up industries, as well helping these governments with various loans to cope up with the economic situations that are quite hard for most of the African countries. So this other person or the other beneficiary within this same corporation is none other than Rwanda. Now, besides Rwanda, we look at what is coming in from Tanzania. Now, Tanzania is targeting a $2 billion in horticulture exports value by the year 2030. So it is something that the government of Tanzania is steadily working upon. So the government plans to unlock the full potential of horticulture as it seeks to make the industry the largest source of foreign exchange in the near future. So by 2030, they want to see that its value is worth $2 billion. The Agriculture Deputy Minister Anthony Mavunde did disclose the idea in Arusha, where he was attending the Global GAP conference, which was organized by the horticulture key driver, Taha. He told the conference that, which had a theme, enhancing compliance for expanded market access and trade, that Tanzania's government has developed a number of policies which are aimed mainly at increasing the horticulture industry's contribution to the economy to around $2 billion by 2030, up from the current $750 million. So when you clearly have more of the situations here, Mr. Mavunde cited opening up the international markets, which also include the development of key infrastructures critical to reducing post-harvest losses from the current 35% to zero, and the improved handling of perishables destined for overseas markets at the Dar es Salaam port as among the measures to stimulate the industry's growth. Now, also furthermore, he also said that the ministry, led by the Minister Hussein Bashe, is working to implement the National Development Strategy, which is calling for agriculture to grow up by 10% by the time it reaches 2030, up from the current 5%. So they want to double the figures to see that Tanzania's agricultural sector is steadily growing, but mainly the horticulture industry in Tanzania. Well, those are things that the East African region can definitely pick up from. If you're to look at countries like Kenya, look at countries like Uganda, and steadily Burundi, as we pick up from there to see the expansion of the agricultural sector and various chances of us developing highly into value addition. Only that, but also saying that the farmers have value for their sweat. Lastly, from Karibu, East Africa, we look at the dollar crisis in Kenya. Now, the banks are earning a lot from this particular crisis, as the banks have earned 52 billion amidst the consumer wars that are coming up. Commercial banks' earnings from foreign exchange trading for 9 months through September nearly doubled on higher demand of the dollar amid the widening margins within the country. So when you look at the Business Daily's analysis of published financial performance statements, shows Tier 1 banks earned $52.89 billion from trading in currencies in the review period, compared with 28.27 billion shillings in the same period of the year before. That is Kenyan shillings now. Bank executives attributed the 87.11% year-on-year growth for the 9 top lenders to the increased demand for the dollar because of higher prices of commodities like petroleum products, if you look at that, which sparked fierce competition for the greenback this very year. Now, manufacturers complained earlier in the year that the shortage of dollars forced them to buy the greenback at a premium to the official Central Bank of Kenya average exchange rate. The cost of essential commodities such as petroleum products, wheat, look at edible oil, steel and pepper as well, hit record levels earlier in the year on COVID-induced disruptions in the global supply chains, which were exacerbated by the Russia and Ukraine war. Now, this meant that the traders were spending more dollars to buy the same volume of commodities they apparently bought last year. Now, a spot check by the Business Daily on Monday showed that some top banks were earning margins as high as 12 shillings on dollar-shilling exchange trade. Now, as well, if you're to focus more on that, several banks were selling the dollar at levels around 130 shillings while buying the same for 120 shillings. Then one top bank, for example, was buying the greenback for around 119.8 shillings and selling it at around 131.14 shillings per unit. The official shilling dollar exchange rate published by the Central Bank of Kenya stood at 122.34 units on Monday this week. The Central Bank of Kenya Governor, that is Patrick Njoroge, has however denied the possibility of parallel exchange rates in the country, even at the time when there was a gaping mismatch between demand and supply of the United States currency, which prompted some banks to cut volumes per trader. So you can see the banks are apparently earning some huge money in Kenya, regardless of the situations of the dollar crisis. But the banks are making some good money, as the customers are crying foul of how expensive the dollar is in Kenya. The banks are making the money. That's it for Karibu East Africa this morning. Now let's get into the S&B International News. Right now, with the international news, we head to South Africa, as South Africa's economy is at a pivotal point, as the outlook apparently is improving. This is good for the people of South Africa, trust me. South Africa's long-awaited economic reforms have begun to improve the country's outlook. But if you're to look at the age-old problems of political uncertainty and the failing power system, still pose significant risks within the South African country. Now, the economic reconstruction, as well as the recovery plan, has been a key tenet for President Cyril Ramaphosa to ensure that there is sustainability within the economy and recovery, surely due to the COVID-19 disruptions, as well as the Ukraine and Russia war that disrupted the food value chain. Now, also on the other hand, ever since Cyril Ramaphosa replaced Jacob Zuma as the country's leader in 2018, you get to realize that there have been deep divisions within the ruling African National Congress and his own cabinet, which has led to sluggish progress, because once the politics enter into the transition of the economy, you get to experience that there are quite a number of challenges that are going to be faced within that journey. Now, the suite of reforms, if you have to look at that, focused on energy, security, as well as infrastructure development. There is also food security. If you have to look at earlier on this year, workers' unions in South Africa had their own grievances, coming up with different strikes due to the economic situations. So these are some of the things that need to steadily be worked upon. Now, when you look at this particular suite of reforms is designed to create a sustainable, resilient, and inclusive economy, according to what the government believes. And some, at least, do appear in South Africa to be working as the S&P Global Ratings earlier this month affirmed that there is a positive outlook in South Africa's economy, so it shouldn't be a state to worry by the time the country heads into 2023. And the S&P Global Ratings also revealed that government measures are set to stimulate the private sector activity, and this is something that is going to definitely boost the growth of the economy. And then there are various measures that have the potential to ease economic pressures within the entire region. However, if you're to look at the political priorities and persistent issues at a state-owned utility that continue to definitely pose present economic risks within the country. Now, a report into an alleged corruption scandal surrounding Cyril Ramaphosa is set to be examined by the National Assembly. That is on December 6th, just 10 days before the party conference of his ruling African National Congress takes place. Now, if you're to look at Ramaphosa, is actually expected to secure a second 5-year term. And with this current situation in South Africa, some of the key issues that he needs to look at is stabilizing the economy. Most of the presidents across the African continent are still struggling to stabilize the economy. The other day we were looking at Ghana with the fact that the president is under pressure, same as the finance minister, Ado. So when you look at that, these are some of the things that people are clearly looking at and focusing to see, are we putting our votes into the right particular government? Because if we are to cast our votes selecting a leader who is not going to stabilize the economy, who has no future secured for us, then we're not doing right. I did mention earlier on this year, South Africa's trade unions were actually going on to strike various areas, not only mining, but also those in the service sector, simply because of the situation that the economy had started with at the start of 2022. But now, according to the ratings, you can clearly see that the economy is steadily stabilizing, and it's something that most of the people of South Africa would be proud to experience in the next financial year as well. Now, when you look at also here, Motana said that in order to secure sustainable economic growth in South Africa, the South African government will need to prioritize energy sustainability within the entire country, because most of the people would feel that is a sector, when you look at Africa mainly, because when you look at South Africa's energy sector, it apparently supports a lot of the manufacturing sector and the growth of the industries in there. Now, away from that, let's look at the crypto farm crisis coming in here, as the crypto farm BlockFi has filed for bankruptcy after the FTX collapse. BlockFi had received a rescue deal from FTX earlier this year as the values of cryptocurrencies plunged. Now, FTX, which is a crypto exchange, ran into its own problems this month as people apparently rushed to pull money from the platform amid doubts about its finances. Former boss Sam Bankman fried the so-called crypto king and resigned, as well as the firm went on to declare bankruptcy. Now, the collapse has apparently shaken faith in the crypto industry and drawn scrutiny from various regulators, as BlockFi, which offered loans and other financial services backed by borrowers' crypto assets, described the collapse of FTX as shocking. Now, in a court filing, New Jersey-based BlockFi said it owed money to more than 100,000 creditors. It listed crypto exchange. It apparently listed crypto exchange FTX as its second largest creditor, with $275 million owed on loan extended earlier this year. It also owed $30 million to the US financial regulator, the Securities and the Exchange Commission, which earlier this year found the firm had failed to properly register its products and misled the public about the risk levels in its loan portfolio and lending activity. So this is something to worry about. The company did reveal that almost $257 million was in cash on hand. And founded in 2017, BlockFi had promoted itself as a building bridge between cryptocurrencies and traditional financial products. It has won hundreds of millions of investment from the big name tech investors, including Bain Capital Ventures and the Tiger Global. And in recent years, last year, for example, as crypto value soared, it said it managed more than $15 billion in assets. So when you look at the financial markets in the world currently, with the African government yet to regulate the issues to do with trading in cryptocurrencies. These are some of the key issues coming in from the United States side. And it's not only the firm, if you're to look at BlockFi, it's not only the firm to be hit by the cryptocurrency prices that had plugged earlier this year. The value of the most well-known digital currency, Bitcoin, dropped from more than $64,000 a year ago to less than $20,000 in the month of June this year. So Celsius Network and Voyage Digital are among the other firms that have also filed for crypto bankruptcy. So there you can see how some particular people are struggling with cryptocurrencies and management of the financial markets in there. Well, away from that, lastly, from the international news, we head to China, as now China posts equity financing to underpin housing markets, as China's securities watchdog rolled out new measures to facilitate equity financing for real estate firms on Monday, unleashing a third arrow to bolster the property market, dubbed the three arrows. The latest round of policy tools to support real estate companies includes three financing channels. There's credit, there's bonds, and equity. Now, the Chinese authorities used similar combined measures back in 2018 to ease the financing difficulties encountered by some private enterprises. Now, the latest measures here is intended to improve equity financing, as there is an inclusive of mergers, acquisitions, restructuring, support for financing and refinancing, which will resume for eligible listed companies in the property sector, according to the spokesperson for the China Securities Regulatory Commission. Now, Hong Kong listed real estate firms registered in the mainland will also be able to refinance themselves here. Now, the country will expand the use of real estate investment trusts, especially in affordable rental housing, such as infrastructure like warehouses and industrial parks, according to the China Securities Regulatory Commission. The commission also plans to pilot property-related private equity funds to help firms mobilize the real estate assets. The first arrow regarding credit financing in China was shot last week, as the People's Bank of China announced it would provide 20 billion yuan, that is approximately $27.9 billion, in interest-free lending loans to 6 commercial banks to guarantee the delivery of property projects. And not only that, in addition to a special loan arranged in October for the same purpose. And in terms of bond financing, the second arrow that China announced last week that it had expanded its central bank-backed debt financing tools to include private companies, which also has bond financing and property developers. That from January to October, China's banking sector lent 2.64 trillion yuan to property developers, according to the China Banking and Insurance Regulatory Commission. So, as you can see, the real estate sector in China, but one of those particular, if you're to, besides the manufacturing sectors, by the way, in China, you get to realize that the real estate and housing sector is another profitable one in China. If we're to pick up from the results of China's development in real estate, maybe here in Uganda or Africa as well, these are some of the areas that we should look at. As you can see, different estates set up in China, and that same kind of setup is one that can take us back to Angola, where the Chinese government that worked upon the Angola's housing project, and also working upon housing projects in most of the African countries as well. And clearly you can see that their shape up is quite different from the rest. So that is China for you, and that is it for the SMB International News this morning as well. We've got 6 minutes to the top of the hour. How about if I remind you that we are running on social media as well? Twitter is Smart24TV, Facebook is Smart24TV Official, and Instagram is Smart24_TV. Then YouTube is Smart24TV Live. Please do remember to subscribe to our YouTube channel, and our website for the latest business information and updates is www.smart24.tv. Please do remember to scroll through and get updated with the latest business information as it's happening in real time. I'm Jerome Paul Sonko, your host, and of course, not only that, you can follow me on Twitter, Instagram, and Facebook at Jerome Paul Sonko. Let's talk business and social factors. After the break, when I do return, I want to motivate you more with the business tips and quotes. I've got the social media trends coming through as well, and more business updates this morning. Stick around.